The world turns, and with each turn, a change. And each change makes it more complex, unpredictable, enigmatic. The world keeps turning. And from the Pellicer Heredia practice, we anticipate everything that is going to happen. Brexit, artificial intelligence, new commercial borders, legal tech. The world keeps turning, and it commands the reliance on international lawyers who are capable of interpreting this new reality with integrity, honesty, and transparency, offering answers to so many new questions. Whatever it is, ask us. At Pellicer Heredia, we know how.
Hello, good afternoon, everyone. Thank you for joining to our regular webinars. And today we're going to talk about income tax return and wealth tax. I know it's a very hot topic now because of the time frame we are having to do the tax declaration, and especially now because with the visa situation, a lot of people are asking about tax planning, which I highly recommend you to do from now onwards if you're planning to come to Spain to live. Okay, now I'm going to introduce you here. We've got on one side Pedro. Hello, Pedro, can you hear us? You've got the microphone off.
Hello, Ignacio. Good morning, good afternoon to those who are listening to us right now. I mean, of course, the topic that we're going to be speaking today is extremely hot right now because we are on the time right now to make the income tax as well as our wealth tax. And as you said, we are receiving many questions and appointments in order to make a tax planning, because in order to be asking on some immigration issues about non-lucrative visa or golden visa, and what will be the impact in order to become resident in Spain, a tax resident in Spain. And well, we will be pleased to answer questions during the webinar. Ignacio.
Okay, thank you, Pedro. Yes, I will encourage you all to start sending your questions because time is precious. We're going to give you an hour of our time, which I think is very useful for a lot of you that might have general questions. I know specific questions might be difficult, but we'll try to give as much as we can. We've got our accountant Guillermo as well here, just covering. And we've got Michael Davis from Almeria. Hello, Michael. Can you hear us properly?
Hello, Ignacio. Good afternoon. I think also the taxes are going to be very interesting for those that are trying to work out whether they're going to become Spanish tax residents or not, because a lot of people that are trying to work that one out. It will be interesting for them to know the difference between the taxation as a resident and as a non-resident before they make their decision.
Right. Okay. Well, thank you very much, Michael. I'm very happy to have a very good, reputable lawyers here. We'll try to give you as much information as possible. We've got the accountant as well. And I'm going to try to just be very fast with a very brief explanation, few tips of advice for you to know a little bit. Okay, I don't know if you're able to see me. See the screen? Are you able to see now? Can you see, Michael, Pedro? Can you see the screen?
Yes. I can see perfectly.
Okay, and you'll be seeing now probably the presentation, correct? I think I'm having problems now with the.
I'm not. The slides right now are like moving a lot.
Okay.
Now it's better. Okay.
Now it's better. Okay. Right. Today we're going to talk and give you a little bit of piece of advice here, and because we've been doing a lot of income tax return, a lot of tax planning for a lot of clients, and I think it's good value for all of you. I'm sure Michael will give his view on clients that are coming over now. Right, for those of you who wants to be living in Spain more than 183 days, okay, that's the key for you to know. You always remember, if you're going to stay more than 6 months in Spain, you will have to inform your home country that you are no tax resident at source and you're a tax resident in Spain. There is a procedure in the UK, it's from the FD9 form, and it's very important for you all to do this homework, because now I'm sure it's happening as well in Almeria. people are receiving a lot of letters, especially now, 2016, which is when the expiring time for the tax office starts. So they're trying to send letters to people saying why you didn't do your tax return, or why do you do the non-resident, not the resident. So important topic, just to keep the whole scenario protected, okay? Now, Spain is going to tax you on the worldwide assets, and we're going to talk today about the income tax return. For those of you who are pretty much retired, I will ask you to concentrate on pensions tax at source. That means that you're not paying tax here monthly basis, like a pension in Spain normally will pay on a regular basis. If you're receiving state pension from the UK, or if you're receiving from United States, any other country, then it is important for you to know whether you're paying tax there or here. Important as well to know that you could use a dual taxation treaty. Okay, and Article 3 talks about what is considered to be resident. Right, income tax you're going to be taxed on in Spain, from work, from interest, from dividends, from rental. Let me tell you one thing about rental, and a lot of people don't know. If you're having a property abroad and renting it out for long term, there is a special allowance which you will only be taxed on 40% of the net. That means income minus expenses, whatever net figure you have, it will be taxed. 40% of that will be the taxable base. Okay, a lot of people don't know these things. It's very well treated, and that's the difference between those property who are short-term, like the platforms that you may have in Booking, Airbnb, that doesn't have that special allowance. Now, income from activities as well, or capital gains if you earn the lottery, which all will like to do. Now, revenues, you need to just concentrate here. Income from savings, income, general income, okay? From savings, we're talking about dividends, interest, and general income is the rest, okay? Now, questions, saving income from 19 to 23, and this year is the sliding scale. I'm gonna just later on give you the article for you to read it through the sliding scale. And the general income, we could do tax planning, and that's why Pedro mentioned that. It will go from 19% to 45%, okay? Bear in mind that there are 12 autonomous regions in Spain with different combination of taxes. Here I'm sharing with you a sliding scale, which I will publish it on the article. And the allowances that you always ask me, Ignacio, what is the allowance we've got? But it will depend on the age that you have. Here on the screen, you will see 5,550, greater than 65 years, you've got the 6,700 euros, and or greater than 75 years, 8,100 euros. You need to add a 2,000 euros extra allowance if you're receiving pensions, okay? Well, there is some important deductions like purchasing a property in Spain, but that unfortunately, that allowance is not anymore from here. It can only be used for those who bought a property before 2013, okay? And then you have extra allowance if you're renting a property here in Spain. You must give to your tax advisor the SUMA bill, the EB, and the contract, so he could put on the tax return the code for you to get the allowance. Again, dual taxation treaty, you never pay double, and different communities will give you different allowances, okay? Important as well, questions that we always had is about selling a property abroad and reinvesting here. Conditions, habitual residence, you need to prove that that is your main residence, and then you will sell it and reinvest the money, so that means the whole profit that you made, you will reinvest it into the purchase of a new property. We've been doing a lot of them for clients because they've been relocating themselves, and it's very important you do tax planning. You wouldn't believe how much money we're talking about on doing a proper planning, okay? So that's good for you to save money. And bear in mind the deadlines. I just mentioned some example, but I will just mention later on. And the wealth tax, to not bore you on this introduction very much. The wealth tax, it will depend on different areas. Here in the Valencia region, now we're talking about 600,000 euros. I think Michael will explain to us later on what happens in Andalusia, for example. Now he's changing these again for next year. So every year, I always recommend you to do some planning. Main property, you've got an allowance per person of 300,000 euros on the wealth tax. The wealth tax, you'll have to do it on the same period of time as the income tax return. And it will be March, April, May, and June. Okay, don't miss that. The 720 will be from January to March, which is a worldwide assets declaration. And you'll need to declare here, the wealth tax will be for residents and non-residents, and depending on the value of the assets they've got here. There is certain allowances, which it could go up to 80%, depending on in combination with your income tax return. Let's say you don't have any income, you live on savings or on wealth. You'll have an allowance up to 80% of the tax that is for the wealth tax. And I did mention here, just to give you a rough idea, the 25% up to 3.12 for Valencia and Ivories, okay? And this is sliding scale. If you go into our blog, in a website, you go into a blog and you've got wealth tax in 5 minutes and you've got La Renta. So you will have the whole explanation for you to learn a little bit more about. Andalusia will be different. I think Michael could give us a rough idea. Murcia is different. And I thank you for that. And we're gonna go now and start with questions. I don't know if Michael would like to say something now before we start into questions for Andalusia, Michael?
Yeah, well, with the wealth tax, there's just a slight difference in Andalusia. In Andalusia, here the exempt amount is the 700,000, with the first 300,000 euro for your main home, the same there. But we have slightly lower rates of wealth tax. You've got a sliding scale there that starts at 0.24. Sorry, zero. Have you got your scale there? It's slightly lower in Andalusia. Let me see what your...
Is it? Right. Let me just share it again, Michael. See.
Yeah.
Let me just see what I could get it back.
Yeah, there you go.
And Andalusia.
Yeah, your rates start at 0.24 and go up to 3.03, and here we go from 0.2% up to 2.5. So it's not a big difference, but just a few decimals less.
Okay.
Yeah,
Okay.
slightly less.
That's
very,
good.
very little difference.
Perfect. Right, Pedro, would you like to add something else before we start with questions? Because we're having a lot, and I'm sure that is the most important thing for people now.
Well, it is just, obviously, I mean, you have already said, but I like to mention all the time with clients that in Spain, we have like two different scales. I mean, you've already said that, but it's important that everyone knows that there are two different scales. One is like salaries, like pensions, and the other scale goes from 19%, 24%, 30, 37, 45, and so on. And these scales means that you pay some amount of money, some percentage of that base of that, for example, 19% or 20, up to 24%, up to 30% on that specific amount. So if someone has like, let's say 100,000 euros, it doesn't mean that you're going to pay 45% of that income. It's up to a specific amount will be until 19%. From that amount to a specific amount will be 24%, and so on. It's like a progressive tax. As much as you gain, as much as you already was as much as you gain, as much as you pay, but it's really as much as you gain, as much as you pay. And the other scale is for interest, dividends, like a saving scale. So it's extremely important to divide and to identify the financial products, the structure, the income, the payment that you've been doing during your life, accordingly, to identify perfectly what kind of, if it's a pension, if it's an ISA, or if it's an IRA, a Roth IRA, if it's just interest, or if it's the dividends. I mean, all this information, it gives us the situation where we need to identify and put that income into one scale or the other one. I mean, there is the first scale I said, I mean, is in most of the cases is bigger. So it is important to identify that sometimes it shouldn't be that in that case, should be in the saving scale really. the one who goes to 19% to 20, 19, 21, 23, well, also 26 if it's more than 200,000 euros, but let's say 19 to 23%. Okay.
Okay.
Having said that, and you've said also regarding the rental, it's extremely important that all the rent, all the worldwide income needs to be included. It's an obligation to include them, even though combining all the international double taxation to avoid the double taxation treaties, it's extremely important that all the income that you get in Spain, if it's, I mean, obviously if you're resident, but also of course if you are not resident and you are getting an income from a non-resident, but I think Michael will be speaking about the non-resident tax, and it's extremely important. So this first thing is there are two different scales. It's extremely important to identify where your income should be included in one scale and the other one. Ignacio, I mean, of course, I don't know if there are some questions. Let's go for them.
There are coming.
We always run out of time, and
yes,
and I will be expecting from them.
Okay, okay. Let's start trying to be as general and as quick as possible, so we could answer as many as possible. Again, I would like Pedro or Michael to put your email address just in case they need a personal consultation with you both or ourselves, because I think it's important just to give you the most of it and now, but a lot of people will need a specific advice. Okay, so please don't forget to mention that, and even to say the telephone number, because I don't think it will be recorded, that one. So is davidsolicitors.com for Michael, and Pedro pellicerheredia.com. And then you will find
I think just important to point out that we're based in the Andalucía region. We're in Almería, Marbella, and Majaca. And Pedro is based in Moreira in the north of Alicante, and you're based in Alicante. So that if somebody needs a lawyer, it's better, I think, that you use the firm that's nearer to you. So if you're in Alicante, obviously there's no point in contacting us, and vice versa, I think would be.
Okay, great. Good points. Now, let's start here with the first question. We've got here, let's go for the very first one. We've got the one that says, good afternoon. I would like to know if I came to Spain under Beckham law and I sold my UK house to move to Spain, whether I would be subject to any capital gain tax. No, in this case, it's not applicable. Okay, you will only be taxed with the Beckham law for the work income from work received in the world. Okay, and in Spain. Okay, we've got in the blog an article about the Beckham law, and you could read it, all these requirements. But the answer is no. You've got here as well. US IRA retirement accounts counted for wealth tax, and the answer, it will be depending on the type of accounts. If it's considered a pension, it will not be taken into account. So it's very important, and I'm sure Michael and Pedro will agree, depending on it's so important when they go and make a question to try to provide you the paperwork that proves the type of product, because that's really the key of the answer.
Exactly, that's right, because I mean, when it's a traditional IRA, for example, it doesn't count, but if it's a Roth IRA, it counts in a wealth tax. So this is what I said at the beginning. It's extremely important to send the information to your tax advisor, check perfectly what kind of investment, what kind of product of investment, retirement is. But if it's a traditional one, it doesn't count on wealth tax. But so I mean, for example, as I said, as an example, the Roth IRA, it does count.
Okay, Pedro. Well, thank you to Charles and Carmen. Gavin has a question here. Hello, Gavin. Hola, tres amigos, he says. Right, let's say here. Right, Pedro, do you want to carry on with this next one?
Okay, because I'm not watching them right now. I mean, I don't see that.
Where are you reading? Where are you reading?
I'm reading the one from Gavin on the very top.
Okay. Hola, tres amigos. I can see it right now from Gavin. Okay. It's in the chat. Okay, if I was resident in Spain and had funds and property in the UK, do I need to pay tax in Spain on my assets in the UK? That's a good question. Ignacio, will you be able to? I mean, someone who's resident in Spain, have funds and property in the UK.
Right.
Obviously,
I was resident in Spain and had funds and property in the UK. Do I need to pay tax in Spain
we need to identify
on my assets in the UK? Well, yes. I mean, you will be tax resident in Spain, and the income tax return, will be lodged here. Now, on the funds, when you mean funds, I guess Gavin is saying capital gain tax. But he's resident in Spain, so at the end of the day, he needs to pay here in Spain.
Yeah, at the end, I mean, on the tax return, on the IRPF, we call it is Impuesto Renta Personas Físicas, so it's like individually, personally, when you are resident in Spain. If you have a property in Spain, which is not your permanent home, it's also, in some ways, is like imputación de renta, which is it is a base a small base of this property is included in the income tax. So some small tax is paid. But having said that, if you are going to be resident in Spain, in most of the regions, wealth tax appears. And if the value of your assets are over some specific amount, let's say, well, 600,000 euros, 700,000 euros, some other regions, I mean, in this region will be less for the following year, then taxes will come into effect. It's an obligation by whenever you are resident in Spain that you have to inform tax office all of your worldwide assets that are over 50,000 euros. It is called Modelo 720, Modelo 720. This is how we call it, 720. And you have to inform, it's an informative, it's not pay taxes, it's just an informative declaration of your assets worldwide if there are over 50,000 euros. For example, Gavin, you say about a property in the UK. If that property, when you bought it, when you acquired it, it was the value of that, it was over 50,000 euros, you need to declare and inform tax office that you have a property in the UK. Also in your tax return, and of course, obviously, if you get some rental from that property, you need to include that income in a Spanish declaration in order to pay taxes in Spain.
Okay. Right. It's important, Pedro. Well, obviously for Gavin, he needs to know if he's renting out that property to include it here. But the bottom line, Gavin, you need to do the declaration here. You might probably be entitled for a rebate or not being obliged to do your income tax. It depends on the minimum income. For example, on pension, the minimum income to receive is 14,000 euros if it's taxed at source, state pensions. Bear in mind, if you have a government pension, civil service pension will be only taxed in the UK, in the US. And always try to consult with the dual taxation treaty. You will see, I think it's Article 19, what it says about pensions and like civil service pension. I had a case today where the civil service pension was taxed in the UK, but didn't reach the threshold, and obviously was not even taxed in the UK, but was declared here in Spain, but there is no tax to pay here, which it was very, very good in that respect.
Okay.
Okay, shall we move on?
Okay, well, let's go for the following question. Well, by the way, Gavin, I like this Tres Amigos, because I remember it was a movie, a Western movie, many years ago. It's like a comedy, and it was really good. It was very, very fun. I'll look for that later. Okay, let's go for the following question. From Michael. It says, I'm a Canadian considering a move to Spain in the next few years for retirement. Well, this is one of the questions. I mean, this is what we are receiving in many consultations by US, Canadians, and all worldwide in order to considering to move to Spain. It says, I want to be a non-resident of Canada for tax reasons and accomplish this under the Golden Visa program. I am interested in knowing what tax exceptions exist and the tax rates of foreign income emanating from Canada, pension, investments, income, and residual income from sale of business. Well, thank you, Michael. I mean, obviously he's regarding, I mean, want to be non-resident in Canada. I assume that he wants to, now what will be his situation in being resident in Spain? What about the Golden Visa? What implicates Golden Visa on tax situation? Well, first off, I mean, I don't know if you want to start, Ignacio, but first of all, about Golden Visa program. Golden Visa program is an authorization to be resident in Spain as an investor. Being resident in Spain through this kind of visa, it means that, well, you have the authorization to stay, live as much as you can, one day or wherever you want. But having said that, if you live in Spain more than 183 days in Spain, then the tax implications is attracted to you, to your situation, and you need to declare your worldwide income in Spain according to the double taxation treaties, and in this case with Spain and Canada. But Canada has a different situation if we compare, for example, for the US, really. But I don't know if you understood Ignacio, but when he says, I want to be a resident of Canada for tax reasons and accomplish this under I'm interested in knowing what tax exemption exists and the tax rate of foreign income emanating from Canada. I mean, obviously, he's talking about income worldwide, pension, investment, residual income from sale of business, which is a capital gain.
I mean, what I consider, Pedro, I think these people that are trying to move over to Spain, it's very worth it now to do video conference and to do the tax planning on their specific situation. You know, a lot of exercise we've been doing is doing, if they provide us all the paperwork, we could do an exactly simulation of how will be the scenario and discuss it further. Michael, would you like to say something?
There's something that I'd like to say to Michael Pretty, and that is to be cautious when he talks about selling his business. I always tell people that if they're going to move over to Spain, you know, the idea is to sell their business and move over to Spain. There's one mistake that I always make people aware of, and that is that for it to be a clean break, we always recommend that they sell the business first and then they become tax residents in Spain. If they become tax residents in Spain before they sell their business, Spain will want to look into the situation regarding the capital gains tax on the sale of the business, and things could start getting very complicated for you. So we always say, where possible, I mean, you can get your golden visa, because that doesn't mean becoming a tax resident, but I wouldn't actually become a tax resident in Spain until I'd sold my business, not do it sort of. So we've seen people that have moved over here and just 5 months after becoming residents, they've gone and sold their business in the UK, and suddenly you've got a problem with the capital gains tax, with Spain asking for tax on the capital gains tax, and in their home country as well.
Very good advice, actually, Michael, because so many problems could be avoided just with that consultation, as I said. Unfortunately, we always see as well situations where they would have. They always say, "I wish I would have known before." So here we go. Right, Pedro, would you like to? Michael, would you like to run through, or just pick the one that applies to you? If you will do the exercise of you, the one that is applicable. I
think you gave me the job of explaining non-resident tax. Yes, was that right?
Yes. Okay. Yes. Go ahead, please.
Let me run through it. 5 minutes. Okay, for non-residents, non-resident tax. Okay, a second, so I can square this out. Okay, if you're a non-resident in Spain and you own a property in Spain, you've moved over here, your obligations, obviously, apart from the obvious ones, to pay your electricity, the water, the rates, the rubbish, and the community of owners, that should all be set up by direct debit. In addition, as a non-resident, once a year, you've got to think about two different things: non-resident income tax and wealth tax. Wealth tax is applicable to very few people, okay? Because as a non-resident, they only look at your properties, they're actually in Spain, your assets that are in Spain, and basically the main home, well, you wouldn't be able to claim the main home because it's not your main home, but basically, if you don't have assets of more than 700,000 euro in Andalusia or 600,000 euro up in Valencia, if you don't have that, you wouldn't have to worry about the wealth tax, okay? When they value the assets, you don't use market values, use catastral values, which are much lower. For wealth tax for non-resident tax, for wealth tax for non-residents, you can't claim the deduction of 300,000 euro on the main home because you can't consider the house your main home. So basically 600,000, 700,000, or otherwise you don't need to worry about wealth tax. Income tax. Income tax you do. And there could be two situations. You rent out the property in Spain or you don't rent out the property in Spain. If you don't rent out the property in Spain, you have to present one very simple form that most people do through an accountant, so they've got a fiscal representative in Spain. It's called Form 210. You present it 1 year in arrears, and basically what you do is they take your cadastral value, which is the value of the property that's assigned on the rates bill, which is about 50% of the real value. They consider the income 1.1% of that and tax you at 24.75%. The short explanation of this is that if you have a flat of anywhere between 150,000 and 400,000 euro, you'll probably pay about 400 or 500 euros tax a year for this hypothetical income tax return. A lot of people, it calls their attention. They say, well, how can I be paying income tax on something where I'm not making any real income? Well, you do. They just sort of presume that you're renting it out every now and again and you have to pay the tax. It's a very small amount though. That's if you don't rent it out. If you do rent it out, then you've not got to make one return a year. You've got to make one return every 3 months. So January, February, March, then you've got 20 days to make the return for those 3 months. You declare your real income, and then you pay at a rate. Is it 24% at the moment? Yes. You pay a 24% tax. Unfortunately, as a punishment for Brexit, UK citizens now can no longer deduct the expenses they have on the property and deduct them from their rentals. They're not allowed to. This has always been the case for third-party countries, you know, Canadian owners, Australian owners in Spain, etc. And now it's automatically applicable to UK residents. I mean, this, I don't know in your case, Ignacio, but here this has caused a lot of problems, especially the people that had 2 or 3 properties and have been renting them out. And suddenly, of course, their tax bill is much higher because they can't deduct their mortgage expenses, you know, the rates, all the different expenses that they used to deduct.
That's correct. Yeah.
Well, that for non-resident...
The capital gain tax, Michael, it will be the only thing... the 19% on selling the property, if you want to run through it.
Oh, yes, indeed. As a non-resident, the other thing that could be applicable to you is when you sell the property. When you sell the property as a non-resident, the way it will work is that the buyer will retain 3% of the sales price at source. So if you sell for 200,000, they'll retain 6,000 euro. The solicitor that handled the sale will then make a calculation of what your real capital gains tax is, and then either pay the difference in or claim some money back. That's it in a nutshell. I think, is there anything else regarding non-resident tax? I think that's it. We've covered wealth tax, we've covered income tax. Obviously, if you have a company in Spain as a non-resident, things get a bit more complex, and that would need a specialised explanation to yourselves. But I think this covers 99% of the non-resident property owners.
Yeah. Michael, there is a question on the chat which I'm reading, which is related to what you are saying as non-resident tax. Is by John. I don't know if you can read it. There are so many questions about this one.
How far back are you?
It's like a 5.
Just give
my computer 520 is John. It starts with the surname. I don't want to say the surname, but with W. John W.
Just
it says, if I am non-tax resident in Spain, but I own a property, and the question is, do I have any tax liability when I sell the property if if the selling price is not greater than the purchase price? So it's non-resident owns the property. Exactly.
The way it works is that when you sell, regardless of you having made a paper loss, the buyer will have to retain by law 3% of the purchase price. They will pay it into the tax office, and then your solicitor, if he's doing a good job, he'll present a 210 form declaring the loss and claiming the money back. From experience, you should get that money back within about 10 months, but it doesn't happen on its own. You have to get the solicitor to actually make the claim. Where there could be an opportunity is with plusvalia tax, because there is a law that stipulates that town halls, well, not a law actually, there's a couple of sentences by the Spanish Supreme Court that says that town halls should not charge plusvalia tax when you're selling at an absolute loss. When I say absolute loss, that's without counting the expenses on the purchase or the sale. Some town halls are applying this and some are not. In most cases, you end up having to pay the money in and then you've got to put a claim in to try and get it back on the basis of those 2 sentences.
Right.
Okay, and also it says regarding this, John, it says any tax liability, but what about when someone dies, if the property value at that time is not greater than the original purchase price? I mean, as non-resident, when someone owns a property in Spain, obviously the inheritance tax applies. Is that right, Michael?
If you're if you're a non-resident, this is quite complex now, this explanation now, but basically in Spain, we have each region of Spain has got different levels of exemption, okay? Now, as this is extra exemptions above from the national exemptions. In the old days, non-residents were not entitled to any of those regional exemptions. But nowadays, there's a sentence by the European Court of Justice that said in the first instance, it covered residents of the EU. In other words, residents of the EU who are inheriting in the region, for example, of Andalusia, are entitled to claim the Andalusia exemption. So, for example, in Andalusia, spouse and children are entitled to €1 million each exempt. So, up to the end of Brexit, UK residents could claim that exemption if they were inheriting in Spain, even if they were non-residents. Now, after Brexit, there was a lot of doubts about whether English people could still claim that. Well, they can. There's been a couple of sentences by the Spanish Supreme Court that says that third residents of third-party countries can also claim the same exemptions as residents of the EU of the region where they're inheriting the asset. So at the moment, if you're a UK resident and you're inheriting from your mother in Andalusia, you're entitled to €1 million exemption. And in Valencia region, well, obviously the exemptions are slightly different, but you'd be entitled to those same exemptions available there for Group 1 and Group 2, spouse and children. Mm-hmm. It's the inheritance tax issue, Pedro. The trouble with it's a rabbit hole that if you start going down it, it's very, very complex and difficult to explain quickly because of the way the law has changed 5 or 6 times in the last 9 years, and how in each region of Spain there's a different system.
That's right.
It's quite difficult for people to follow it on a webinar like this, I think.
I know it's quite complex, the whole thing, isn't it, Michael? But I think it's good because a lot of information here to digest, isn't it? Now,
I think with inheritance tax, basically the thing to take away from here is that it's very complex. There are a lot of exemptions available. Most people don't pay inheritance tax nowadays, but you need to ask about your specific situation from somebody that knows. People get very confused when they're looking on the internet because they may be reading your blog, for example, which talks about the region of Valencia region, and they may read my blog that talks about the region of Andalusia, and they come along thinking that there's this exemption, that exemption, and it all sounds strange and foreign. It's because they're looking at the wrong. they're not talking to the right. You know, it's different in every region. They can get very confused. So, explain your situation, book a consultation, explain it to a solicitor that knows about inheritance, and he will tell you what your situation is specifically.
Michael, is basically like going to the doctor, isn't it? Going to the dentist, like the client says. I'm going to the dentist here, so it's a bit painful, all these things. Yeah. Right, Jackie's making some questions here, but is it correct that you don't actually get the £5,000 allowance, but only 19% of that? But I don't. If you'll need to explain, Jackie, what is your question? I mean, the allowance, minimum allowance is €5,500. But after that, there is a sliding scale. If you go into our article that one friend might join here, La Renta in Spain, you will see the sliding scale. Okay, but the allowance, yes, is correct, the 5,500. Okay, let's move on because we have lots
of many questions.
Yeah, let me just catch up with where we were. Okay, my mom lives permanently in Spain, tax resident, and her income is her pension, minimal. She's also 1/3 owner of a house, still in mortgage. Should she be income tax? I'm not resident of Spain, citizen of the Netherlands. The mortgage is on my name. Should I pay any taxes at the moment next to the taxes, the bank taxes? I think he got confused here. I pay for the mortgage automatically. How much percentage is the tax when the mortgage is completely paid? Okay. The answer here, basically, if the mother lives in Spain, she needs to do the tax declaration in Spain. If she's got, even though, don't get confused here, and this is important for you to know, Don't get confused, you got a low income, because sometimes you're obliged to lodge your income tax, but it's nothing to pay. So don't be afraid on just doing the consultation here, because I had a case that you don't reach enough, but let's say you get interest from abroad. We've got a lot of income tax return where they don't reach enough, but you have some interest, or you have a little bit of money coming in. And between the three of them, you have more than €1,000 not taxed in Spain, and therefore you're obliged to submit it. Now, submit it, I consider is good, especially if you don't pay, obviously, because it proves you're here in the system, you are registered, and it really gives you a protection, especially to prove the visa situation for those who need to renew the non-lucrative visa and or different type of visa. Okay. But yes, the answer will be the son will have to do the income tax return as a non-resident. And there is a lot of situations where they share with children, but they don't do the non-resident tax. And some of them are residents. So now another question, do you mean that the value of a IRA, USA IRA, is taxable? Right, the IRA,
Well,
it does. Yeah, go on, please.
I think what we said before, I mean, it was about wealth tax that is not included, basically included the Roth IRA, but about the US IRA, I think what you are saying right now, you're asking, obviously the income that needs to be included in the income tax declaration. Okay, I think it's just to clarify that it doesn't count as a wealth tax asset in order to be included in this specific tax, wealth tax, but it's included in income on the tax return.
Mm-hmm. Right. Investors who have overseas pensions, such as a QROPS or UK ZIP, who under the UK law will be entitled to 25% PCLS, pre-commencement lump sum, free of tax, and I must say, in the UK. Is there any concession or tax-free amount allowance in Spain? Okay, no, we don't have the same allowance as in the UK, and a lot of people get confused, and I'm sorry to say people should do it properly, because otherwise it will be taxed, and I've seen different situations which are not nice, where you will need to end up paying a lump sum. There is a big connection on the exchange of information between different countries, and they might ask you, so if you need to withdraw that money, George, then do it before becoming fiscal resident, as Michael stated before. Okay.
Yeah, that's extremely important. And sometimes when someone is applying for like non-lucrative visa or holding visa, or wants to become resident in Spain, obviously in the same year they have an urgency to come to Spain. It is better to be resident at the end of a year, not to be tax resident in Spain, in order just to be living in Spain less than 183 days. So whatever withdrawal, lump sum, or maturity of anything, or selling a property will not be taxed in Spain, as you are not going to be tax resident that year, even though you obtain residency at the end of a year or the second semester of a year. It's important to what you've said, you and Michael, in order to be sure what will be your obligations, and if you could, if you pay less taxes in before you become residents, that's better. Right.
So basically, George, the answer is be careful here. It's taxable at your marginal rate as income. So that's the importance of doing tax planning. Right, let's move on. And I think Michael just have a say here. Daryl is asking us questions about inheritance. And let's say,
very interesting questions. So I'll run through them. I was just looking at them.
Yeah, have you identified the questions, Michael?
Yeah,
so you
I'm
can run through
Daryl. Okay, Daryl, there's a lot of questions. He's asked 8 questions. Let's really run through them very quickly. Okay, will inheritance tax on property in Spain be payable if we are non-resident for tax in Spain? Okay, in Spain, everything depends on where the beneficiary is resident. If you are becoming a non-resident of Spain, it depends on who's receiving the inheritance and in what region you are. But basically, as we said before, non-residents can claim the same exemptions that residents will be allowed to claim in that particular region. For example, if he's moving to Andalusia and his children are going to receive his asset, well, let's say his spouse, maybe it's his spouse. If they're moving over to Andalusia and they're worried about the inheritance tax that each spouse would have to pay if they receive from the other, in Andalusia they would be exempt up to €1 million, even if they were non-residents. In Valencia region, there's also an exemption, but it's a lower amount. Will inheritance tax be payable if we become residents in Spain on our UK property? It depends. You'll definitely, if you become resident, have to declare what you receive in the UK, but whether you pay tax on it or not will depend on the values. If you are resident in Andalusia, you're entitled to €1 million tax-free if you receive the asset from your spouse, or your parent. So if you inherit half a property in the UK, a total value worth €1 million, you inherit half of that, 500,000, plus half a flat that you have down in Malaga, for example, worth another 150. In total, you're below the €1 million, you wouldn't pay any tax. But if you're a resident, you have to declare the assets worldwide. Can UK citizens in Spain request for UK inheritance tax rule to apply? No. Okay, now, people get very confused with that. When you hear that you can make a Spanish will choosing English law to rule how you're allowed to distribute your estate, it means it's so that you can escape the Spanish system of obligatory heirs. In other words, you're choosing English law just to determine how you're allowed to distribute your assets when you pass away, because Spanish people can't leave everything to their spouse if they've got children, for example. So it's just basically to escape that system. But as far as inheritance tax, it has no effect on inheritance tax. You can't make any choice regarding what inheritance tax is applicable. Okay, if a UK property is held in trust for children in the UK, is it excluded from Spanish tax, capital gains tax, and inheritance tax? That's a very interesting question and impossible to answer with that information. This comes to us a lot. If you're a resident in Spain and you've received an inheritance in the UK, normally you have to declare what you've received in the UK in Spain to the Spanish Inheritance Tax Office. But what happens if it's gone into a trust, etc., etc.? We have to see the exact wording of the trust, whether there's any possibility of being undone. It's very complicated because Spain doesn't really understand the figure of trusts. I'm sure Ignacio and Pedro will agree with me that those declarations are quite complex to be made in Spain.
Absolutely. Yeah.
But again, though, it all depends on if, for example, what's going to trust is all worth less than €1 million, and you're in Andalusia and you're receiving from your spouse, it doesn't really matter because you won't pay inheritance tax. When the tax man will start disagreeing with everything is if it's above the exempt amount. But I say in Andalusia, the first €1 million is exempt for spouse and children, and even after that, you get a 99% deduction. So it's if this estate that we're talking about is going to be received by children or spouse in Andalusia, it's not a problem. If COVID prevents returning to the UK for a week or month, will this trigger a tax charge in Spain? I don't understand that question. I don't know if. Sorry. Have you an example of how inheritance tax is computed? Okay, for that, the best thing is to please visit our website, and there is an example of how it's calculated, but it's a long 3-step procedure. Too much to explain here because it would take about 10 minutes to explain. Can outstanding mortgage, capital, estate agents fee and other costs involved with selling a UK property be deducted from any gain before tax is applied in Spain? Okay, if we're talking about an inheritance, then the taxable base would be, of course, reduced by whatever mortgage was pending on the property in the UK when it was inherited. You wouldn't be able to deduct the estate agent's fee on the selling of the property because Spain values the asset at the moment it's being received, not after you've actually sold it and changed it for, basically received the money from the sale. Let's make that. Spain has a higher marginal tax rate. Is it better to file the US tax return first in order to claim deductions?
Where are you now, Michael? You're number 8?
Sorry?
Are you with the very latest question from Daryl?
Oh, sorry, no, I was slipping over into the next person. Okay, no, that's it for Daryl. That's it. All answered.
Okay. I think she has, if COVID prevents returning to the UK for a week or a month, will this trigger a tax charge in Spain? I don't really understand here, Michael, the question, but at the end of the day, tax office was very clear. If you stay here for more than 6 months, you're a tax resident here. So I know a lot of people were here stuck in Spain because of COVID. Technically, the tax office just sends a resolution saying for those who stay here, they should do it here. That's basically the situation. Okay, now let's move on because time is running out. Where are we here, Pedro? Pedro, do you pick up any other?
Well, let's go ahead. Let me see the chat.
On. Okay.
Let's move on, yeah.
Let's move on. Right, we understand there is... Right, if I'm non-tax resident in Spain, well, this one was already answered. I have a private pension under 14,000 euros per year. I also have annual interest of 1,000 euros from savings per year. Added together, they come to approx 4,000 euros per year. I understand that because of the interest, I'm liable for income tax return, which is correct. If I was not receiving interest, would I still be taxed? Well, that's the answer here. Very good. You've got the obligation to do the declaration if you receive interest with no retention or no tax at source. Okay, but don't get confused. Lodging doesn't mean paying the tax. Okay, but the answer is, I think you said you have less than 14,000 euros, and then you will only have 1,000 euros from savings. If you don't have any income from savings, only 14,000 euros, you're not obliged to pay to do the tax declaration, but you can still have the stamp and prove you are in the system, which is something that I normally like people doing, especially if it's not going to cost you money, because you never know eventually what kind of evidence you might need for renewing, etc., etc. Okay. Robert is saying, I'm a UK citizen resident in Spain. I have a UK personal pension. Now that the UK is a third country, is it your understanding that my personal pension will be liable to wealth tax in Spain? No, don't get confused here, Robert. Pensions are treated only on the general income base. Okay, and wealth is just only assets that you have here in Spain. Okay, but no pensions. Okay, it's like what we said with the IRA. Okay, for the United States, you will only have to do your income tax return. We've got here, I earn and receive income in India, pay taxes there. So can I claim the deduction while filing my tax return in Spain to avoid dual taxation? Another problem is that Spain follows calendar year, whereas in India, the year is April to March. Okay, we'll have to just see the specific income you will be having from India. So we'll need to have more information here. Even if you had to pay tax in India, we could use a dual taxation treaty here. I don't know if Pedro, Michael, are you following me on the questions?
Yeah, well, I'm reading an interesting question here from Mr. Alan Hills.
Okay.
He's asking a question about Armoria. So if you like, I'll take that. Armoria.
Okay, go for it.
For inheritance tax on monies left to me, my mother's will, not exceeding 180,000 euro. My mother died recently as a UK resident. I am a Spanish resident and live in Armoria. Do I have to declare this next year, my Model 720 declaration? Okay, well, the answer to everything is yes. In other words, you have to declare, as you're a resident in Spain, you have to declare in Spain what you receive by inheritance worldwide. So within 6 months of your mother's death, you have to declare that inheritance of 180,000 euro to the Spanish tax authorities. In this case, to the inheritance tax office, the regional one of Andalusia. You're entitled to up to 1 million euro tax-free, so any tax, but you have to declare it. And then, so you'll declare it now, you have to declare within 6 months of the death, And if you receive the inheritance this year, even if the money spends only 1 day in England before you bring it over to Spain, next year you'll have to declare it on your 720 form. The fact that there was a moment in time the previous year where you had more than €50,000 outside Spain.
Okay. Pedro, would you like to pick the one you think is relevant?
Okay, well, let's go. I mean, I've read some of them. Let me just check. I mean, I've seen some of, it says, we will be residents in Spain as a married couple, and one of us has a teacher's pension and one NHS pension. Believe there are different rules for taxing this pension. I mean, public pensions and government pension, in this case, is paid in the country, in the home country, and resident pensions are in the residence country. Okay, that is the main difference. I can see one other question is made around regarding these tax retirement accounts is called 401k. Let me just find the question again. I mean, it says, how about the US 401k retirement account for wealth tax? I've heard conflicting information. Should the 401k accounts be reportable on Modelo 720? Do you need to pay wealth tax on them? Well, let's take again about the Modelo 720. And I think there is another question regarding a couple that says they own jointly a UK property. They have to report or inform the tax office in Spain through Modelo 720 because they own a property in the UK, with 2 modelos or 1 modelo jointly. It needs to be done in 2 different declarations. But answering this question about the 401k, these ones are not, this is about criteria, will not be included in the wealth tax as a 401k retirement account. But having said that, whenever it's going to be withdrawn, whenever it's going to be like finish that kind of account, then that year, the following year, will have to be reported as an informative declaration of Modelo 720. Even though these things are very complex, obviously, I recommend you to contact directly and have a personal and video conference or appointment in order to take all this.
Just one more thing. I think they're asking, because we didn't cover the inheritance tax in Community Valenciana. Okay, well, basically, just for Daryl, and I think Graham is asking, unfortunately, at the moment, we don't have as good a scenario as Andalusia. As I remember in the old days, it was different. It was 99% off here, and now, unfortunately, they changed it. Okay, but we hope we'll get it eventually there. Now, the situation about inheritance tax is we've got on the main property, you've got up to 156,000 euros on your main property, 95% off on that figure. Then you have 100,000 euros allowance, and the rest, it will be a sliding scale, which I did try to send you here through the blog, the sliding scale. It's sliding scale, but you have an allowance of 50% of the tax, depending on the blood relationship you've got with the family. For example, it's hard to say, but it's important, obviously, and I highly recommend you all having a will. That's exactly as Michael said, according to British law. But second, if you wish, you'll have to do tax planning at that time under that scenario. And in this Comunidad Valenciana, at the moment, if you split it, obviously, because this allowance goes per person per heir. So let's say you have 3 children, you could benefit from the equal shares, for example, and have the main property, the 100,000 euros allowance, and whatever tax needs to be paid is a reduction on 50%. If you split it more, because you have enough beneficiary, then there will be no tax. But again, this is part of the tax planning, very, very important thing for you to do. And as I always say, it could change tomorrow. So it's always good to be in contact with your lawyer, okay? And now, before we go, Michael and Pedro, would you like to give any very last tip of advice for people? Because we are still on the tax planning situation. I think they could still do a lot of things. Would you like to say something else before we go? Even please say your telephone number, and in case they want to contact you for a specific consultation. Michael,
okay,
anything else?
Oh, Michael.
Well, what I say is that if you're buying a property in Spain, to consult, I think, before you do it with a solicitor. And there's a lot of things to consult, really, from basically the difference between buying in one region and another, depending on your circumstances, the decision on whether to become a resident or not, depending on your circumstances. Also, the different scenarios in the future regarding your will and how you want to distribute your estate, and how again, the different regions offer different types of exemptions, because each region is different. There's Valencia region, Andalusia region, Madrid region. They're all good for some people and bad for others. So it's basically consult a solicitor about all these things before you come over. That's what I would suggest.
Thank you, Michael. Pedro, anything else?
I mean, nothing. Just recommend to make a tax planning, to study, to check perfectly which is your scenario, to understand how it works, taxes in Spain, in order to be duly explained. If you're going to move to Spain and you want to make a tax planning, verify what is going to be the scenario accordingly whenever you come to Spain. In sometimes it looks like complex, but in sometimes, I mean, it's once you explain, once it's checked, things can be straightforward and easy. So we just recommending to make a tax planning as a principle.
Okay, thank you very much, Pedro. Thank you, Michael and Pedro, for your time. I'm going to leave you with one video, and we're going to see you not the following week, the next one, because we're running out of time to do all these webinars, but we're not leaving you alone here on these things, okay? So, Michael, have a great evening now, Pedro, and over to Juan Fran.
Bye.
Trust is vital when you're in another country. If you want to buy a home, set up business relationships, or apply for a residence permit, you need to be able to count on the best independent legal aid. Pellicer Heredia is an international firm of lawyers with over 20 years' experience and one single aim: for you to live at ease in Spain. In order to give you a clear, streamlined, and fast response, we work with a cross-disciplinary team of professionals specializing in the main legal fields: civil law, foreigners' affairs, business law, tax and financial law, and international law. And to ensure that you're kept informed and up to date with everything, we have 6 offices on the Eastern Coast. Whether you're from here or abroad, we will always stand by you and speak your language. Our relationship is based on openness, professionalism, and a commitment to finding legal solutions in your best interests and for your peace of mind. Pellicer Heredia, international lawyers.